Hi, I'm Jude Wilson, Chief Wealth Strategist at Centrus Financial Strategies. And I'm here today with my good friend Kurt to talk about the top 10 tax tips. Say that fast 3 times. Hey, Kurt, how you doing today?
Doing well, Jude. Thank you very much for asking me to talk with you today. And just to introduce myself for those that haven't met me, I'm Kurt Alter, a tax principal in the advisory and tax area at Rehmann, a fully integrated firm of CPAs, business consultants, and advisors. The new year is upon us, and it's time to start thinking about the tax returns and tax filing season. So it seemed appropriate that this would be a good time to start talking about these tips.
Absolutely. So let's get to the heart of the matter. Let's get into it. What would you say is the first tip people need to understand?
First and foremost, get organized. Always, there's a lot of documents that people will be getting. It gets more and more complicated all the time. Technology between W-2s, K-1s, and other information, 1099s. Get data organized so when you do meet with your tax preparer, tax professional, it can be an efficient meeting and that you have everything together as best possible. So get organized.
That makes perfect sense to me. I don't know if people are still bringing you the shoebox, but getting organized seems like the first real step.
That's right.
So let's move on to the second step. What do you think would be second most important thing to do?
Well, probably decide whether some people often, now that you get this, there are softwares and such for folks to do it themselves. Do you want to do it yourself or do you need a tax professional? It's probably the next consideration. A lot of documentation, a lot of tax law changes. We keep hearing the word that Congress is going to make things simple. That doesn't usually happen. So therefore, but there are softwares. H&R Block has some free stuff out there or inexpensive stuff you can use. I think the IRS has some stuff. Or you reach out to a tax professional for your assistance. And that depends on your own situation, obviously.
Yeah, I think the more complicated your taxes get, definitely it would be advisable to see a professional. I've got a degree in finance. I took accounting. I was doing my own taxes for a while, and then I just could not handle how complicated it got and sought your advice. So I would agree with you. Seeing a tax professional is probably a good thing. So let's keep this ball rolling. Let's move on. What would you say is the third thing that's most important?
Well, and that decision, that's probably 2 and 3. Deciding whether you do need one, and then if you do, how do you decide on one? And that's somebody that, it's going to be a relationship. You want something that's long-term. If it is getting complicated, do you have other advisors to make a team of advisors? The financial person, I'm not similar to you. I took a lot of finance, but I am not an investment person. I'm a tax person. So people, as it gets complicated, they need a team. As things happen through life, you need to talk and seek advice. And it's an ongoing relationship.
I couldn't agree with you more. There are so many people that are holding themselves up to be tax preparers. You can't go down the street without seeing a Statue of Liberty sign, somebody holding up and saying, I'll do your taxes. It's important to talk to someone that you have a level of comfort with that really understands this stuff and have that relationship with. So I'm with you 100%. Now, this next tip, I think is also very important. Let's talk about that.
Okay, now let's talk about some actual taxation. How do we defer income or reduce our taxes now and maybe pay the tax later, and if we can defer? And so what I'm alluding to is retirement plan contributions. Can we put money away now for retirement later, not pay tax on income now? Yeah, we'll pay tax on it later, defer it. Typically, time value of money, that's a good thing to do. As folks get older, if they haven't done it, because one of the things I would say here is start early. The sooner you can start putting away the growth, finance, understand the growth, the sooner you can put it away, the larger the pot will be at the other end. That said, if folks don't get to do it as they get older, the tax law gives us some provisions where when you hit 55, you can start catching up because you didn't put it away earlier. So and again, in our presentation here, there is a connection at the bottom that gives you all of these different limits as to the maximum amount you can put in. And certainly if you can afford it, please do so. And if you can't put maximums away, put something away. Start deferring the income as best we can to plan for the future.
Yeah, those catch-up provisions are important. I'm don't want to give my age, but I'll let you know I've started doing my catch-up provisions. I qualify now to do that myself.
Okay.
So this is an important topic too, because people are trying to decide whether to put their money away on a tax deferred basis and take tax deductions in the current year, or to do Roth accounts that they might not get a tax deduction this year. They won't get a tax deduction in the current year, but they'll have tax-free income in the future. And I can't think of a better person to talk to, to really try to understand that than your financial advisor and your tax professional working together to come up with a plan that makes sense for you individually. So now that we're talking about actual tax strategies, number one thing I hear people ask me questions about are deductions. Can you help us with that?
Yep, we can. Things that are in your personal, we're talking personal tax returns right here primarily. So these are things that you spent money on that you can deduct against your income: interest, taxes, charity, things of that nature. And Congress did give us some benefit a few years ago where they increased that limit where people don't have to itemize their deductions as much. And they went up to, well, for a single person, 12,500. Married folks, it's up to 29,000 that you're given as a standard deduction. Now, if you give more to charity, if you have more interest on your home, things of that nature, and you account for it, you're organized, you've got those deductions, add them up, because that's going to reduce your taxable income and you'll pay less tax. We do have some limits on those things. So again, because there's limitations on some of these things, you need to be talking to a professional that understands what these rules are and to assist you in maximizing these deductions. Government does give us a pretty good amount, 30,000, 29,000 for married couples. But if you have more there, it's still allowable. So those deductions are there.
Yeah, it's important. And people often get confused. And unfortunately, we don't have the time to get into a lot of depths, but they get confused between tax credit and tax deductions. That's why, again, I always stress to people, see a professional that really understands this. The laws are constantly changing. We had the Jobs and Tax Act that changed the itemization and the standard deduction. So this is fluid. This is not something that you can kind of set and forget. Now, moving on to the next tip, we kind of touched on this a little bit when we were talking about retirement planning. Tell us what the next tip is.
Well, yeah, you did. We were going to talk about Roth conversions. And I think now that we have you alluded to it a moment ago, Roth IRAs are where we put money away. We don't get a current deduction, but we don't pay tax on the other side when we get it out. But we do enjoy the tax-free growth. So there's a possibility, and again, you need to talk to a financial advisor and a tax professional. If you have a traditional IRA where you've taken deductions, and you will get the money in the future, but it will be taxable to you, should you convert it to a Roth so it'll be tax-free in the future? Well, there's a calculation. There's a current tax cost now, but then you would have tax-free growth and tax-free income in the future. When is it a good time? Facts and circumstances for everybody are different. So that's a consideration in this retirement. How do you want to do it? There's more than one way to do it. So
absolutely. And the laws with that have changed over the years too. And sometimes people think that, oh, I want to get all my money tax-free and I need to do some conversions. But conversions could also cause a domino effect that can affect other things, like what tax brackets you're currently in. So it really takes some time to kind of think through this and come up with a plan, and not just to act just because you heard it was a good idea to have tax-free money in the future. So
absolutely.
Now, moving on, we're getting close to the last three. What would you say is the next on our list?
Well, the one we've got now that kind of relates to taxation, it's venturing over a little bit of just having our affairs, a little bit of getting organized, affairs in order, estate planning, beneficiaries, making sure that your financial affairs are in order. If something were to happen to you, and hopefully nothing will, God forbid, but if it does, will the growth in the assets that you've accumulated go where you want it to go? Are your beneficiaries whom they are supposed to be in your mind? Secondarily, gifting. If you have assets where you want to start transferring wealth, That can be done now. Current law is that you can give away to per donee, anybody you'd like, $16,000 a year without filing a gift tax return. You can give more than that. However, a gift tax return is filed without paying tax. But again, talk to professionals. How do we transfer wealth? And I guess the last couple are kind of related. Tax scams, refunds being promised. Be careful about what you hear. I mean, it's common sense. IRS does not call you. IRS does not send emails. IRS does not reach out to you. Typically, they send letters. So if you're hearing this, don't be afraid, but don't fall victim to it. Refunds where people are promising refunds. Think about it. Is it too good to be true? Maybe. Talk to a professional. Those are kind of numbers 8 and 9 about refunds, scams. Be very careful.
I've seen that before. I've seen people, unfortunately, get scammed through emails, or people get scammed saying that we can get your refund to you faster, and them not understanding, the consumer not understanding what is all involved in that. So I think that's really good advice to just be very cautious on who you work with. And we're at our last tip. You let them know what our last tip is.
Okay. Please file timely. Folks that don't file, the IRS, there is all this documentation, there is all this technology. The IRS has the information. File the return. File them timely. If we need an extension of time to file, we can get those granted. It is not an extension of time to pay the tax, only an extension of time to file the return. So if we're trying to get documents together, that's fine. We need to make a good faith estimate and pay what we believe our taxes due at April 15th. If we can't, still file the returns. The IRS will work with you. There's such a thing as payment plans and so forth if people can't pay their tax. But please file the returns timely, get them in, and there is a process. Don't ignore the system. It won't work out well.
It will not work out well. Unfortunately, I've talked to people, and I've had 1 or 2 clients who did not file timely, and not everybody is aware. If you owe taxes and you do not pay those taxes, you're going to pay penalties and you're going to pay late fees. And it's like getting on a hamster wheel. It compounds quick. So you never want to be in that situation. So if you can file, pay your estimated tax liability, that's better than ignoring the elephant in the room. So, my friend, I think we've covered all the top 10. I think it was beneficial for me. I'm hoping it's beneficial for our audience. I want to, again, stress, if you're not working with someone and you need a referral, Kurt is our strategic partner. He's got years of experience working with us and our clients. And so reach out to us. Let us know how we can help. Thanks for listening. Kurt, thanks for your time today.
Thanks very much.